You know, in the world of crypto, 1 hour can change everything. It can be the difference between making a fortune and losing it all. So that's what we're going to do today. We're going to unpack one of those hours, a moment of pure chaos that absolutely ripped through the market. And we're going to look at what the reactions of some of the world's most powerful players tell us about the future of money, tech, and even power itself. Let's connect the dots. All right, first up, a shock to the system. So picture this, all the charts are flashing red, alarms are probably going off on trading desks everywhere, and the market takes this sudden, violent lurch downwards. This wasn't some gentle dip, it was a full-on shock. So what's the price tag on a shock like that? Well, get this, $140 million. That's how much got wiped out in just 60 minutes from what are called leveraged long positions. Basically, these are traders who are betting big with borrowed money that the market's going to go up. When the price went down instead, bam, those bets got forcibly closed out, liquidated. The speed of it all just shows you the brutal volatility that's always lurking. So what kicked off this whole mess? Well, it all comes back to Bitcoin. The price took a nosedive, right? It dropped about 3% in a super short amount of time, falling from over 107 grand to under 104 grand. Now, a few $1,000 might not sound like the end of the world at these prices, but trust me, when you're playing with high leverage, that's all it takes to start a massive wave of forced selling. Okay, so while all these smaller traders are feeling the pain, the big money, well, they're playing a completely different game. For them, a little bit of chaos isn't just a threat. Nope, it can be a huge opportunity. So right in the middle of all this panic, what does Michael Saylor from MicroStrategy do? He posts this. Orange is the color of November. It's this, cryptic nod to Bitcoin's orange branding. What he's really saying is, you guys see red on your screens, I see a fire sale. And look, he wasn't just talking, he was acting. While everyone else is panicking, his company swoops in and buys another 397 Bitcoin. That's a $43 million move. The takeaway here is huge. This wasn't panic. This was pure strategy. Literally taking advantage of everyone else's fear. And Saylor's not the only one playing the long game here. Not by a long shot. Just like at Grayscale. They're rolling out a new ETF, which is basically just a way to bundle a bunch of crypto into one thing you can buy like a stock. And look at what's in it. Bitcoin, Ethereum, Solana, XRP, and they've just added Cardano. This just goes to show you, right? Despite all the crazy daily swings, the big financial players are still building more and more ways for traditional investors to get in on the action. But this whole thing, it's not just about charts and traders. No, the ripples from this shockwave went all the way to Washington, D.C., where a totally different kind of power play is unfolding. And apparently, President Trump is boiling the whole debate down to one single question. Will we be number one in crypto? See, he's changing the conversation. It's not, is crypto good or bad? It's, is America going to win? That totally reframes this as a matter of national strategic importance. And what's pushing that question to the forefront? You guessed it, China. The big worry is that while the US is still figuring things out, China is going all in, getting very big into Bitcoin and crypto. Suddenly, crypto becomes another front in the rivalry between the two superpowers. And, kind of lurking behind all of this is the Federal Reserve. Their decisions are like the weather system for the entire market. So you've got Fed Governor Waller talking about cutting interest rates in December. And Treasury Secretary Bessent is on board as long as inflation keeps dropping. So why does that matter? Well, lower interest rates usually mean cheaper money, and that money has to go somewhere. Often it flows into things like stocks and, crypto. The Fed is basically setting the stage for these huge swings, both up and down. Okay, so let's pull the camera back one more time, because what started as a crypto crash is actually a piece of a much bigger story, the global battle for who will dominate technology. Check out this quote from Jensen Huang, the CEO of Nvidia. He's talking about bringing manufacturing back to the US. We're talking about the actual hardware, the chips that make everything run, from crazy AI to crypto mining. This shows the battle for tech isn't just about code. It's about who controls the physical stuff that makes it all work. But it's not as simple as just build it here and forget the rest of the world, because that same CEO says a new trade deal is critical for Nvidia to actually sell its stuff in China. So the real strategy here is a super delicate balancing act. Build up your home base while still competing hard in these huge global markets. And then you get this really interesting angle on the whole tech battle from someone who helped start it all, Vitalik Buterin, the founder of Ethereum. He's making the case for open source and verifiable systems, for everything, even self-driving cars. This is like the core philosophical fight of our time, right? The open, decentralized world of crypto versus the closed, walled garden approach of the big tech companies. Okay, wow, that was a lot. We've gone from a market crash to global politics in just a few minutes. So, what's the big takeaway here? What happens next? I think the most important thing to see is that a day like today, a crazy day of market volatility, it doesn't just happen in a vacuum. It's really the result of all these massive forces crashing into each other. You've got the wild, minute-by-minute market action. You've got the stone-cold, calculated strategy from the big institutions. You have entire countries trying to get an edge in crypto. And it's all happening inside this even bigger race for who will dominate technology for the next century. And all of that brings us to the one final question that really matters. In this giant new digital arena, with all these powerful players, the traders, the billionaires, the governments, making their moves, who is actually making the rules? And are the rest of us just going to have to play by them?